Sponsored by Chartered Financial Strategies. You are now watching Tax Bites.
All right, now we're going to discuss kind of the Part B, which is the individual portion of the tax benefits of the CARES Act. And there's really two-ish we're going to talk about mostly. Some of the others are a little esoteric for the most part. The stimulus payments is the big one everyone's asking and questions about. And really the best place to go for that, if I'm not mistaken, is here. IRS has actually given some decent guidance on this. Ahead of my subscribed software that I go to or subscription people I go to services. But for the most part, you're going to have, if you're single, 75,000 to 99,000 is where you'll get, that's the kind of the phasing out period. So below 75,000 in income, above that up to 99, you'll start having a phased out portion up to that portion, up to the 99,000 income. Head of household, I think, is 112. I don't know if they have a threshold for that, like clearly stated. And for joint filers, it's 150 to 198. So anything below the 150, you'll get your full stimulus check, 1,200, 2,400, plus $500 a child, with a cutoff of 17 years of age for each child, and that will get you your stimulus check. They are going to send the check electronically based on the bank account of record they have. So that will determine, that's how you'll get it. It doesn't look like I'm going to mail a check. If you don't have, and they're doing it based on, I guess, the count, what banker information they have on record, which would be, I don't know if they keep it from year to year, but if you filed a 2018 with bank account information on your form, on your tax return, that's what they would go to. If a 2019 with bank account information on it, they would go to that one. If that has changed, there's a portal they're supposed to set up. This again is that idea versus implementation. A portal's not set up, but checks are supposed to be going out, or at least payments are supposed to be going out. So if you have an old bank account that's been canceled, and where's that going to go? I don't know. But there's a portal they're supposed to set up. I don't see any indication of where that is. But then you can go enter in new bank information or whatever where they can direct deposit it to. If you haven't filed a return for 2018 or 2019, and you're supposed to have filed, really 2018 is the core one, they'll say you'll still get your money. You just need to file it and get in the system, and they'll give you your money. And ideally, to add your banking information on the tax return, so you can do that, and it'll get there. So 2018, 2019 is the basis for your what you're going to get. And I don't think there's a clawback provision here saying that if you get too much on one of those returns, they're not going to take it back. The amount, the stimulus is available for the full 2020 period. So you have time to get things filed and get your stimulus check based on old returns not being filed. For those who don't need to file, such as Social Security, people for the most part who receive solely Social Security, they will provide that, and they will base it on the Social Security statement. And I'm guessing they'll look to your Social Security information for a direct deposit on that, is my guess. So that's the stimulus payment there. Now the other core provision in the individual portion, or the individuals are getting benefits from the CARES Act, is the 10% early withdrawal penalty for coronavirus distributions, or related to coronavirus impacts. And these are distributions from your retirement plans, IRAs, and so forth. And what happens is you can get the money out up to $100,000, and it's penalty free. It can also be allocated income-wise, I'm understanding, over 3 years, so a third, a third, a third, and that's important to really understand that you're responsible for keeping those records, that how that money's being allocated. My guess is there's not going to be a special code for a distribution for coronavirus. You're just going to request the money. The IRA or whatever company, the IRA or retirement plan is going to issue a code 1 or code 2 on your 1099-R, and you got to deal with it. And have the return prepared to say we're going to put money here as income for this portion. The other portions we're going to carry forward to other years, and in those years are going to have to reconcile and so forth and so forth. And so there's going to be some record keeping on your part to basically dispute what the 1099-R is going to say. And this is that implementation at the ground zero level. Along with that is you having records to show that you were economically or impacted somehow by the coronavirus to get the penalty waived and the income allocation over a number of years. You also have the ability to repay this over 3 years. So pay the money back to the retirement plan which again is record keeping on your part and something where the IRA company may not, or custodian may not be as I would say, diligent in that effort. So you're going to want to be able to support what you have through efforts, and that's working with your tax advisor. And real quickly, the provisions that relate to coronavirus distributions are, here we go. You were diagnosed with it, and I'm not going to go through the formality there, by a test approved by the CDC and prevention. Oh my gosh, that's going to be, yeah, that's its own issue. And that or a spouse is diagnosed with the virus, or you experience adverse financial consequences as a result of being quarantined, furloughed, laid off, work hours reduced to such virus, or being able to work for the lack of child care due, or closing of hours, so, you use all this, business hours reduced, if you're closing of business hours reduced, or operated by the individual due to the virus disease, and other factors due to be determined by the secretary. So basically, probably, somewhat similar, I'm guessing, but for the most part, quarantine, stayed home, couldn't work. But you need to document that, a note from your employer that you were sent home, that you were put on certain kinds of leave or reduced pay, those kinds of things. So that would tell you that that you've got some opportunities to make this claim and document this with your tax advisor and so forth to qualify. And then also the financial administration of that as you move forward. The taxes are going to have to be dealt with when you recognize the income each year going forward. And just as a caveat, in 2010, we had our Roth conversion impacts that happened where someone could take money out of an IRA, convert it to a Roth, and there were some large dollars. I'm talking 10, 100, 150, 200, $500,000 Roth conversions I was dealing with. And clients remembered they took it out in 2010 and paid zero tax, but when 2011 came in and they had to take half of it then, and then 2012 was the other half, they totally forgot, were not managing it, and actually totally, were very frustrated with the impact of taxes. So this is something that has to be dealt with regularly through the year and understood. So that's a big benefit, I think, there that can be dealt with. So those are the core individual benefits. There's some waivers on RMDs, required minimum distributions for 2020 for those who have it. Some minor deductions you can take above the line for charitable donations that are not donor advised or not private foundation ones that you can put, you don't have to put on your Schedule 8 for 2020. And there's some ability to pay student loan debt. The employer can pay student loan debt and it not be taxed with the employee, but be a deduction for the employer in there as well. So, but that really wraps up the individual benefits or opportunities related to the CARES Act. I'm going to insert something here for individual, really individuals mostly, but it would be also business owners can have the discussion as well for their individual returns. But in December 20 of last year, there was a new bill passed. It was the Secure Act, if I recall. It reinstated some old tax extenders actually retroactive back to 2018 through 2018. So I think mortgage premiums were added back in as an interest deduction. Tuition deductions were added back in. I'm trying to think what else. There's some energy credits as well. But the point I'm saying is if you're going to come in for some of these discussions, there may be a larger discussion than just say the payroll tax credit or self-employment, unemployment insurance, or records to collect so I can get unemployment insurance and how I can do that, or a letter to write for this. There may be some larger things that can be wrapped into here where maybe that person's fees, that tax advisor's fees, can be leveraged across, amending the 2018 return for some of this, getting an amended return with a possible refund addition in there that comes 3, 4, 5 months later, but it eventually comes based on some of this here. So don't forget those opportunities that may have not been worth the money, but now are because of larger discussions to be had. Okay? So again, we'll move on to the rest of the CARES Act.